Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go.
Hi, everyone. Today's Monday, December the 8th, and this is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band. Charts are by TrendSpider and Gamma Flows by MentorQ. We're going to begin first with a little bit of a news outlay before we jump into the charts. First thing I want to show you is what last week and the month, 30 days trailing, has looked like. Okay? This is just broad performance of all the different sectors. Here's what we want to notice. When we see utilities and consumer defensives at the bottom of the space with negative trend or flat to zero trend in an upward direction, it means that it is a risk-on environment. There are no flights to safety in this last month. But what there is internal rotation. Now, notice from utilities being at the very bottom of the list in a 30-day trailing, on Friday, it was at the top of the list. So here's what we're staring down. Utilities, top of the list, but consumer defensives still at the bottom. Consumer defensives would be in a risk-on environment, and that's what we would stare down. Risk-on is where, risk off is when everybody's in a flight to safety. Risk on is when everybody is in a flight to momentum. Okay? So, what happened on Friday is a split. Now, here's why, in my mind. Energy is going to become incredibly important to us. And so, as we stare down the utilities, I believe this notion of flight to safety being utilities is going to shift because energy is so important. All right, that's sort of the big lag. What the picture tells you is, hey, dips are buy zones, okay? That's what you interpret from this kind of space, but it does mean that there are some dips that could be on the horizon. Secondly, we'll take a look at the economic calendar for the week. The big deal is Wednesday, FOMC meeting, interest rate change. A lot of things could get spurred by this interest rate change. A lot of things go on in the mortgage industry. It could spur things that we actually need. And so we'll have to see how this trickles down. It's probably going to be just a quarter point. And what the real storyboard is going to be is, what is this conference going to look like? And when we parse through the notes of the FOMC meeting, it's going to tell us who is dissenting, how much dissension is going on, and the market's going to respond to that. That response is going to be pretty important. If you watched Market Kickoff last night on Top Step TV, which I sure hope you did, if not, go back and check it out. A lot of relevant information still useful there in the trades. We talked about distributions, and that's when you get your dividend payments for those of us holding portfolios that have dividend events. Some of those can be quite large, and it will drag on market price because when a dividend gets paid out, it is immediately reflected in the downward flow of that price. And there are a lot of dividend-bearing stocks, so we could have a little bit of an additional dimple in the market, but we are in a formation where dips are very likely to be bought. Okay? All right, now we got ourselves a backdrop. Let's have a look at the actual chart. Here we're staring down the E-mini S&P futures. We can see on the 4-hour trend is up. Let's pop that heat map up there. We can see that we're building a ledge. Dips are buys. Look at the dynamic flow of the chart. And so what we can see is, hey, I'm trending upward. So one of my favorite guys to listen to is JJ, VWAP trader. And what he was talking about just really spot on last night. He was discussing, let's move this heat map down. He was discussing how important the reflexive bounce off of this region here near 68.73 was going to be. All right? So what does that look like? Now, you can see a lot of negative pressure underneath that, but it's not about where the wicks go, but where price stability engages. And on a 30-minute chart, you aren't able to see it as much as maybe if you're looking at a 1-minute chart and you're seeing wicks down and immediately people buying things up. And so that call right there was absolutely beautiful, made for a lovely long. I, of course, in market kickoff, I was looking at this ledge at 68.76, had enough of a cushion that allowed me to do that. So that was a good overnight trade for me. 68.86 was the top of my range, so I'm well out of that. But what we can see is that overnight inventory is long. So let's take a look at this and let's expand it out into the future. Right? What does this tell us? Support floor, currently 68.80. Resistance, 68.90. Right? Now, could we have a lot more flow than that? Absolutely. But the trend is the most important thing to see. Notice how momentum is essentially sitting in the sideways pocket. Slightly positive, but it dips down. So what does this tell us? This is not a runaway train. Pay attention. Notice these candlesticks retracing each other. And so you don't buy the breakouts. What's inventory doing? Inventory is finding itself a box to work through. So where is that at this juncture? Well, we've got two of them. We've got one that begins right where price action is sitting right now, at that 68.86 area, all the way down to that 68.76. So what we're going to do is clone that space. The range is very, very important. And we're going to see the top of the range is right there at that 68.95, 68.96 that I mentioned. We're going to clone it one more time, and we're going to see that we've got a floor of support sitting right around these edges. So dips or buys. Where's the area where you go, ruh-roh? I probably ought to not go wildly long if I lose this level. That's going to be 68.80, right? Let it fall. If you're looking for longs, let it fall and then watch for the traders recapturing heavy congestion and inventory accumulation. That's super important. Here is the 0 DTE call wall. It is at 68.80. Whoa, that's interesting. The one-day max is at 69.36, so that's going to be the top of the range for really big range expansion. These are going to be areas that are likely to find selling zones. The one-day min is likely to find buying zones. If it ever gets down there, that's 68.23, and we know that number very well from last week because that's really where Wednesday just took off and went to the upside. Put support for the 0 DTEs, 6,800. It also happens to be the new put support for the big formation. Remember, this thing has consistently moved up from 6,400 to 6,500 to 6,700, and now it's sitting at 6,800. So trending prices upward. Watch for the floor to drop out here. I would say, I don't know, late Jan. We're going to be watching for that, right? But the 0 DTE call wall sitting here, I don't know. Oh, yes, the big call wall is still at 7,000. Okay, so those are going to be the lines in the sand for the ES. Let's take a look at the NQ. All right, NQ. First, 4-hour formation. We know there's a lot of rotation going on here. Look at this beautiful break. It's sitting in this upward trending space. It's got a lot of nice upward flow. Resistance to the left. We've got the call wall at 25,800. That's sort of where we're jammed up to right now. And you can see that overnight inventory is slightly long, right? They've been buying in the overnight. Nice upward flow. Dips or buys, most certainly. Dips are certainly buys in the broad index. Now, let's draw a trend line. Right? We don't draw the trend line to trade the trend line. We draw, well, I mean, you can if you like. That's not why I do it. I draw the trend line to remind me that there's an active trend in play. Okay? Now, inventory. What's going on there? Well, kind of a big pocket. A lot of wicks. But the trade action still looks like this is the range that we're staring down. But I see a range within a range, so let's try to box that one out. If we see the range within a range, let's take this last area, what happened on Friday, and we'll box it out, and we'll see that the floor of support somewhere around 25,687. All right, that's pretty far away from the point of control. It's in a low value node, but it does look like that's where they're messing around. Now, if you say, Anne-Marie, my style is that I don't like to look at the wicks. I just like to look at the candle bodies. That makes for a smaller box that sits oh, for the love of Pete. All right, let's lock this thing first. Lock. Okay, now let's go in here. For heaven's sakes. Let's look at this one first. Let's look at this one where we go, listen, we just want to see where the major candle bodies are moving, and this is what we're staring down. So it's very tight, and we can see we had pretty solid upward expansion in this range. And so I'm going to clone the rectangle. Man, I'm taking a long time today. And I am just going to push it up to see if we're holding the same magnitude of motion in terms of a congestion event, right? So here we have a distribution that popped up through this box. The distribution event started at 25,730. And we started another level of accumulation about 25,770. And right now, that's where our floorboard sits, right? Floorboard of motion right around that area, 775. So, operator error here, right? So where's it going? Top of the box, right? We had a trade like this last night, right? Where we had our sell zone up here at the top of the box, a beautiful collapse into that space. Should have left that one running, would have been a very, very nice trade, but I did stop it at around the 720-ish area. But now we're going here. Where are we going? Top of the box, right? So what do we expect? Shorting action to show up somewhere around 25,820. If we expand there, we're going to have another distribution event and then another inventory. But the range that they're holding seems to be about 40 points wide, 45 points wide before they break out and give us acceleration. All right, so dips or buys, momentum is flat to up, but a good looking formation. Just remember, don't think you're going to have some sort of massive upside acceleration event. The market simply is not showing that. Let's go to Bitcoin. So Bitcoin had a nice rise last night. I took short somewhere around here, right, at this 90,000 level. And no, that's not true. Yeah, it's about 90,000. And what ended up happening is that the price action dipped and then moved upward. Someone in the chat had a long in Bitcoin. I sure hope that went great and they were able to hold it. Let's go to the 4-hour here. Look. Oh, this is interesting. I forgot about this. You see this? We have a cross current. A lot of people used to call this a diamond pattern, but I mean, how the heck do you trade that diamond pattern, right? I mean, obviously I see it's a baseball diamond, but how in the world do I trade something like that? I don't know, right? I don't have the brains for that. I'm a simpleton. I truly am. So what's happening here? Nice upward flow. Remember, minor liquidity event midweek, and then we should grind ourselves up into relative resistance. Let's take a look at where the call walls are. Oh my goodness gracious. Rewind. Let's go back here. Did I even say where the call and put walls are? Big put wall, 23,350. The 0 DTE call, yes, I did label that. The 0 DTE put, 25,500. Those are areas for us to watch. Brain hemorrhage right there. Okay, so now we're looking at micro Bitcoin, the call wall at 95,000, the put wall at 92,000. So we've had some overnight shift. Upward flows. This put support is sitting in a space I think is, it's a tight spot, right? Between the 95,000 area for the call wall and the 92,000. We've got $3,000 of upward motion where both the call sellers and the put sellers make money during the course of the holding of that option. Right now, we've got negative drift in the flows in general, but the morning has been upward. Overnight inventory in Bitcoin is long. And so where do the buyers want to make sure price action holds? Well, where have they been accumulating inventory? We know the top of the inventory box is really about up here at the 93,000 area. The bottom of the inventory box is about 91,500. Right now we're sitting right in the middle. So what's the trade? Wait until it gets to the bottom of the box and then consider along there. And that's 91,500. If it holds, great. Stair step into 92,300 and then 93,000. Easy peasy. Little steps at a time. Don't worry about jumping in. But remember, when price action has been like this pre-market in this sharp upward flow, there is inventory correction that normally occurs for most of the stocks. This one is still in a negative flow, but as you can see from the 4-hour chart, it is shifting. So we could have a nice little Santa Claus rally building in micro Bitcoin. Okay, big storyboard. All right, let's take a look at oil. 4-hour chart first. Very big, ugly patch. But notice, folks, this trend line that I drew, I don't know, weeks ago, downward flow, rocketed through it on Friday, went to value area high at 60.50, and now has collapsed right back into the range. What are the walls? Well, first of all, let's look at the heat map. You can see there's a big body of congestion here. To me, this is something that makes me go, I'm going to wait until the bottom of that congestion zone, and then I'm going to try and take a long. Where might that be? Well, what do you know? Put support, the 0DT put support is 59. The larger put wall is at 58. The 0DTE call wall is at 60.25, and the big call wall is at $60. And so what we saw overnight is a shift of where the floors are for the put support. If you watched market kickoff, this put floor for the 0DTE was underneath the big put wall, expecting wider intraday range. Now they move that put support all the way up, so the fade brings us the buy zone. So what are we staring down? Dips or buys, still a momentum trade, but getting into the put floor for the 0DTE at 59 gives us a good bounce zone that we could possibly take all the way up to $59.60. The call wall remains 60, but they're really trying to continue to force price down, right? This is what we're seeing. This is a big trend downward with a lot of nasty wiggles in between, right? If we put this into a framework, we're going to see that that edge is holding pretty well in that parallel framework. So watch for the fade, let it collapse. Hey, Anne-Marie, can I take a short? You can do whatever you like. The question is, have you established proper risk parameters so that you aren't, selling pencils in the park later? That's very, very important. Look at where heavy congestion from 2 days prior is sitting. The base of the floor, again, 59.11. That's where I'd be looking for potential reflexive motion. Inventory is extremely short in the overnight here. There's been a lot of selling. It could be that there's a minor bounce and then a lot more selling back into the floor. Okay? That's something very, very important. Next, let's take a look at gold. So what do we have? Nice sideways flow. Really, inventory is pretty jammed up, slightly positive. Let's see where the traders have been accumulating. They're building a new range. Perfect. This is where we have our box, right? Perfect. This is definitely where we have our box. The floor of support. I think the floor of support is value area low, which is beneath the put wall. The put wall is currently at 42.25. The call wall is at 4,300, and then the large call wall is at 4,400. So 0DTEs have a sort of stopped at about 4,300 for resistance and 4,225 for support, but value area congestion tells me that that number is probably closer to 4,210. Now, here's the thing. If we break this area, folks, we're going to go from one area of the heat map to the other. So that's going to bring us down into the heavy congestion that is present between 4,175 and 4,200. So we really have to watch out there. From a 30-minute perspective, we've got sideways trend, right? We've got big pockets of support and big pockets of resistance. Look for the dips. Look for the dips to buy, and then you'll be in good shape, right? I like the dips at around 4,212 to potentially 4,220, but if you take it at 4,220 and it loses 4,218, 4,218.50, just cut and run, folks, because the next stop is all the way down. And listen, the markets are very willing to take all of your money whenever they can. So just obey your risk thresholds and come back to fight another day rather than saying, all right, I'm going to hold on. Don't do that. As someone who's done that and lost a ton of cash, I'm begging you, don't do that. All right, lastly, let's look at SPY. Good grief, how long have I been talking? Let's go to the 4-hour. And let's hit the heat map. Same thing, building forward motion. As I mentioned last week, this one was, and it continues to be, clear upward flow, folks. Clear upward flow. Every dip is getting bought. The floor of support, I think, is the high volume node, and that's 682, defined by the gamma flow level from Mentor Q. 0 DTE put support looks like 680. 0 DTE call resistance looks like 685, and guess what? We're at 680, 684, right? Rotationally, that says, hey, let's pull back a little, and then let's run after it one more time. Okay, so let's get this heat map out of here. Let's expand the chart. Oopsie. Let's get rid of this beast. As we look at more upward flow, you can see trend, momentum, everything saying dips or buys. What do the traders want to do? They want to get it under the call wall for the 0 DTE and then rotate that call wall up. That's what they're going to try to do. That number 685. That's a great buy zone, right? The people who are sitting with the 0 DTE calls here need to rotate it up or they're going to be upside down. Remember, once they come in and they try to lose that call wall and then they can't, they're going to buy in the direction of that break. All right? And so that's going to give us amplified motion in that direction. Watch for the potential of that happening here in the SPY. All right? Take care, everyone. Be careful. Trade smaller size, right? I know there are a lot of places, there are a lot of places that are like, ooh, this is the season to put the pedal to the metal, as they used to say. But you always want to watch your risk, folks. Watching your risk gives you the opportunity that if you're wrong, you get the trade for another day. The biggest thing that can help us is our conviction about what we are seeing translating into a forward price action that we think is going to come. The greatest thing that could absolutely blow us apart is that same conviction, right? Remember what Michael Patak says, right? Strong convictions, loosely held. Why? You want market-generated information to give you directional flow. Okay? Good luck, everybody. I'll see you on the streams.